Right now, something very serious is developing in the global financial system, and most people still don't see it. The truth is, the system we all trust, banks, money, and even ownership, may not be as safe as we think. History has already shown us this once, and if you understand what happened before, you can start to see the warning signs today. Welcome to Gold Silver Scope, where we break down complex gold and silver insights into simple, clear understanding, so you can stay ahead of what's coming. Let's start with a powerful idea. Gold has never really been just an investment. It has always been wealth itself. For thousands of years, across empires, kingdoms, and civilizations, gold was not something people bought to get rich. It was what people held because they were already wealthy. It was real money. It was security. And most importantly, it existed outside the system. But today, things are very different. Almost no one owns gold or silver anymore. A very tiny percentage of people have any real exposure to it. Most people trust digital numbers in bank accounts, stocks, or paper assets. They believe the system is stable. But what if that trust is misplaced? If we go back in history, there was a time when governments actually stepped in and took control of gold from the public. Back then, people trusted authority more, and gold ownership was common. Today, ownership is rare, but control of wealth has become more centralized than ever. And this creates a very important question. If something like that were to happen again, would it even look the same? Probably not. Instead of going door to door, modern systems are far more advanced. Today, most wealth exists in digital form or within financial institutions. This means control can happen quietly through rules, policies, or system changes, without people even realizing it at first. And this is where things start to get interesting. At the same time, if you look around the world, especially outside the Western system, the story is very different. In many countries, people are actively encouraged to buy gold. It is visible everywhere, in markets, in stores, and even promoted openly. For them, gold is not an old idea. It is still very much part of everyday financial thinking. This creates a big contrast. On one side, you have a system where people are moving away from physical wealth and trusting institutions. On the other side, you have regions where people are increasing their ownership of real assets like gold. So why does this matter? Because when global behavior starts to diverge like this, it often signals a deeper shift. It means not everyone believes in the same financial future. And when trust starts to split, markets can change direction very quickly. There is another important concept here: ownership. Not just owning something on paper, but truly owning it. Gold and silver, when held physically, are not dependent on any bank, any system, or any promise. They are not someone else's liability. They simply exist. This is very different from most modern assets, which depend on institutions, systems, or counterparties. And as long as everything works smoothly, that system feels safe. But when pressure builds, when uncertainty increases, people start asking deeper questions. What do I really own? Who controls it? And what happens if the system changes? These are not just theoretical questions anymore. They are becoming more relevant as the world becomes more complex, more digital, and more interconnected. And this is why gold and silver are starting to come back into focus again. Not because they are new, but because they have always been reliable. When we talk about gold and silver today, we are not just talking about shiny metals. We are talking about real wealth, real security, and a layer of protection that the modern financial system cannot replace. And to understand why, we need to look at how the system works behind the scenes. Most people think that if you put your money in a bank or in financial instruments, it's safe. They trust institutions to protect their wealth. But in reality, modern finance has shifted the risk away from institutions and onto individuals. Laws and regulations have quietly changed over the past decades. Bailouts used to protect institutions, but now we have bail-ins. That means if a bank runs into trouble, depositors could be among the last to get paid. The system says you're now a creditor, unsecured, with very little protection. This is where owning gold and silver outside of the system becomes so important. Physical ownership means your wealth cannot be frozen, manipulated, or erased by a bank, a government, or an institution. It exists independently. This independence is precisely why gold has been sought after for thousands of years. It is wealth that cannot be created, printed, or manipulated, unlike paper money. At the same time, we see large institutional holdings, like ETFs and funds, controlling huge stockpiles of gold and silver. On paper, they hold tons of metal. But in reality, the average investor cannot take possession. These centralized stockpiles act as control points. Institutions can move metals, lend them, or even use them in ways that ordinary investors cannot. That creates risk and concentration that few understand. Meanwhile, global demand for physical gold and silver continues to grow. In emerging markets, ownership of metals is encouraged and widespread. People are building their wealth with something real. And here's the important part. When global demand increases and the system you rely on is fragile, price imbalances can grow fast. This is why understanding the difference between paper and physical ownership is critical. Owning paper gold is not the same as holding metal in your hands. One exists in a system vulnerable to manipulation, regulations, or systemic risk. The other exists as true wealth, tangible, independent, and secure. Now some might say, but I can diversify with digital assets like Bitcoin or other cryptocurrencies. And yes, digital assets can play a role. They offer decentralization and liquidity, but they come with their own rules and risks. Unlike gold and silver, most digital assets depend on networks, exchanges, and infrastructure. And as recent history shows, exchanges can fail, networks can be compromised, and regulators can intervene. So, the strategy that makes sense in today's environment is to combine both approaches. Physical ownership gives you true security, while digital assets give flexibility and modern exposure. But the core lesson is clear. You cannot rely solely on the traditional system for wealth preservation. History has shown repeatedly that centralized control carries risk, and that risk can become reality faster than most expect. Another factor to consider is privacy and surveillance. As the financial system moves toward digital currencies, stablecoins, and digital IDs, every transaction, every purchase, and every asset can be tracked. While these systems might offer convenience, they also give unprecedented power to monitor, control, and limit freedom. Physical gold and silver exist outside this control. They are one of the few ways left to preserve independence in a digital world. Finally, let's not forget compounding. One of the most powerful lessons in wealth building is simple, consistent accumulation over time. Buying a small amount of gold or silver regularly, regardless of market conditions, creates long-term security that far outpaces speculative chasing. It's simple, it's effective, and it is timeless. Gold and silver are not about speculation. They are about preservation, freedom, and security. And in an increasingly monitored and manipulated financial world, that lesson has never been more relevant. When we dig deeper into the world of gold and silver, one thing becomes very clear. The biggest players in the market are not individual investors. They are large institutions, central banks, and commercial banks that hold massive amounts of gold and silver in ways the public cannot. Understanding this is crucial for anyone serious about protecting their wealth. Take the large ETFs and funds as an example. These institutions hold enormous stockpiles of gold and silver, often millions of ounces, but individual investors can rarely take physical delivery. The metal is technically owned by the fund, not you. The average investor holds a paper claim, which is exposed to the fund's decisions, market rules, and regulatory constraints. In practice, this means if the system ever faces stress, paper holdings may be vulnerable, while those holding physical metal remain protected. Central banks also play a critical role. Over the last few years, they have been quietly accumulating gold at a historic pace. This is not random. Central banks understand that their fiat currencies are exposed to risk from inflation, debt, and geopolitical instability. By holding gold, they create a hedge, a safeguard against economic shocks that paper currencies cannot provide. What does this mean for you? It means the trend in gold accumulation by central banks is a signal that serious players are protecting themselves, and there's a reason you should too. At the same time, commercial banks control huge positions in metals, sometimes even manipulating markets. History has shown that certain banks have faced fines for manipulating silver and gold markets. Even after being penalized, they remain custodians of massive holdings. This concentration of power creates systemic risks. When control is concentrated, small actions by institutions can have disproportionate effects on prices, supply, and access. Here's where it gets really important. You need to know that wealth preservation requires independence. Gold and silver held outside the system cannot be confiscated or manipulated in the same way as centralized holdings. Whether it's physical bars, coins, or trusted self-custody solutions, these holdings give real ownership, not a promise or a paper claim. Now, let's talk about diversification and strategy. Some investors think digital assets like Bitcoin can replace gold or silver. But these are not substitutes. They are complements. Both serve similar purposes, protecting wealth outside the traditional fiat system. Bitcoin offers digital portability and liquidity, while gold and silver provide tangible security and centuries of proven stability. A well-rounded portfolio uses both, digital for flexibility, physical metals for true security. Another point often overlooked is counterparty risk. Modern finance relies on trust in institutions, banks, fund managers, regulators. But history shows us that trust can fail. Bail-ins, regulatory changes, and system failures have shifted risks onto individual investors. Physical gold and silver, held independently, are not subject to these risks. No one else controls your metal, and no one else can seize it without your consent. Lastly, consider global demand. While less than 1% of the U.S. public owns gold or silver, in other parts of the world, especially in Asia and the global South, metal ownership is widespread. Countries encourage their citizens to invest in gold. This global demand puts upward pressure on prices and reinforces the long-term value of physical metals. As we move further into the modern financial landscape, one thing becomes painfully clear. The world is rapidly digitizing, and this brings both opportunities and risks for your wealth. The rise of digital currencies, digital IDs, and blockchain-based systems is reshaping how money moves, how assets are tracked, and how privacy is maintained or lost. For anyone serious about gold and silver, understanding this shift is essential. Digital currencies, stablecoins, and blockchain transactions promise efficiency, speed, and accessibility. On paper, this sounds perfect, but these systems also introduce unprecedented surveillance. Every transaction, every on-ramp, off-ramp, and identity verification step can be tracked. Authorities could monitor not just your identity, but your sources of funds, what you buy, and even where your money moves globally. This is a huge change from the centuries-old independence that gold and silver historically offered. Imagine a world where your money is entirely digital, traceable, and centrally controlled. Stablecoins tied to traditional financial systems already give institutions visibility into your wealth. Combine this with a digital ID, and suddenly governments could have detailed oversight of your finances. This is not hypothetical. It's the direction many systems are moving. Physical gold and silver, and even decentralized digital assets held in self-custody, offer freedom from this level of oversight. They exist outside centralized control, reducing counterparty risk and offering privacy that modern digital systems cannot. This makes the strategy of holding a mix of assets even more important. Physical gold and silver act as a hedge against digital and fiat systems. They are a form of insurance, a tangible store of value that no one can arbitrarily seize. Digital assets like Bitcoin can complement this strategy by providing liquidity, fast transactions, and global reach. But relying solely on digital systems exposes you to systemic risks, surveillance, and regulatory changes. A combined approach strengthens your portfolio against uncertainty. History also teaches us the importance of having control over your assets. Governments have attempted to confiscate or control gold before. Roosevelt's gold confiscation is a famous example. Today, centralized ETFs and institutional holdings could theoretically allow similar leverage over public assets. But independent physical ownership remains outside that reach. If you hold gold or silver privately, in a secure location, you are fully in control. You're insulated from manipulation and sudden policy changes that could affect paper claims. Another crucial factor is counterparty risk. Modern banking and finance are built on trust in banks, custodians, and regulators. But trust can fail, often without warning. Bail-ins, regulation changes, and market manipulation have all shifted risk to individuals. Physical gold and silver and self-custody digital assets exist outside these systems. They cannot be frozen, seized, or manipulated in the same way. Your wealth remains yours. Global trends reinforce the value of holding physical metals. While ownership is limited in the U.S., other parts of the world, especially in Asia, actively encourage citizens to hold gold. This creates global demand that supports prices, further highlighting the stability and long-term value of precious metals. Meanwhile, institutional control of paper metals continues to concentrate risk at the top, creating volatility that private holders can avoid. As we wrap up this deep dive into gold, silver, and modern financial risks, the message is simple. Owning assets outside centralized control is no longer optional. It's essential. The world is changing rapidly. Digital currencies, blockchain systems, and stablecoins promise convenience, but they also come with surveillance and centralized control. Physical gold and silver, combined with self-custody digital assets, provide security, privacy, and long-term wealth preservation. The key strategy is diversification. Don't rely solely on paper assets or centralized institutions. Hold some gold and silver physically, whether in a safe at home or a secure vault. Complement that with digital assets for liquidity and growth potential. By blending these approaches, you create a resilient portfolio that can withstand both market volatility and systemic risk. Global trends reinforce this approach. Emerging markets actively promote physical gold ownership, while central banks quietly accumulate metals. The signals are clear. Gold and silver are not just investments. They are anchors of wealth that have endured through centuries. In contrast, reliance on digital systems alone exposes you to counterparty risk, policy changes, and surveillance. At Gold Silver Scope, we focus on giving you insights that help you protect and grow your wealth in a world where financial freedom is increasingly under pressure. Understanding history, global trends, and the interplay between physical and digital assets is crucial. Knowledge is your first line of defense, and action comes next. Actionable steps you can take today. 1. Acquire physical gold and silver in manageable amounts to ensure security and privacy. 2. Diversify into decentralized digital assets to maintain liquidity and global flexibility. 3. Educate yourself about market trends, central bank moves, and institutional holdings. 4. Stay informed about regulatory and technological changes in the financial system.